Let's drill down a few more earnings across finance, industrial goods, and the oil and gas segment of the Nigerian market. Welcome my guest, the Group CEO at Carrier Asset Management and a licensed market professional, Johnson Chukwu. Sir, hope you had a great trading day on our market street. We thank you for connecting into the show.
Thank you for having me. Good evening, Bosin.
Yeah, thank you. Chat to me on the full year 2024 financials of United Capital. That's the investment banking company on the exchange. What do you make of those earnings?
Well, Bosin, if you look at the performance of United Capital in 2024, you will observe that in terms of gross revenue, the gross revenue was largely flat. I think it was an increase of about 5%. But if you disaggregate that, you realize that their investment income and foreign trading income were quite strong. The previous year, they made a very strong income from other income, which I think had to be related with foreign exchange gain, which wasn't there this time around. But despite that decline in foreign exchange gain, which was classified as other income, their turnover this year was higher than that of last year. But in terms of cost, one of the areas that they had a strong performance was in terms of cost of credit. You saw a material decline in their cost of credit, that is provision for credit losses, which came down from about 18 billion to less than 1 billion. So ultimately, they had an improvement, material improvement in the bottom line in terms of profitability. There was also a material growth in their total assets, and we saw a significant growth in their investment assets by more than 100%, which led to that growth we saw in their total assets, which what has really flushed into their earnings in terms of earnings from investment income. So to give a summary of their performance, I think the performance was quite strong, and despite the decline in exchange income, they were still able to make earnings above the previous year's earnings. There was a significant improvement in terms of quality of risk assets, which saw a material decline in their cost of credit, and that's what led to the material increase in their profitability.
Okay, so when you look at outside those top line items, sir, if you look at what you call the shareholders' funds, total assets, and all of that, if you pull those numbers together, what does that tell about the strength of this particular of United Capital?
Well, if you look at their total asset, like I said, the total asset had the material growth by over 100%, from about 931, like you were showing here, to about 1.7 trillion. And it's quite huge, about 83% growth. But if you even look at the funding sources, you realize that managed fund grew materially, and as well as borrowed funds also grew materially, which simply means that their share of market has improved. And if you are in a competitive business, one of the things you look at for a share of market. And remember, for a financial institution, the size of the balance sheet is very critical in terms of driving your earnings. So what you look at, the quality of your balance sheet, the quality of your investment, the size of your assets, or total balance sheet. These are major measures of capacity of an institution to make profit.
The market here is very heavy on the banking and financial services, and that's where the market where United Capital also plays. So do you have the banks doing the capitalization as we speak? It looks like insurance are also getting ready in one corner, as it were. So do you think there are certain developments within the economy and the marketplace that could be could put United Capital on a very strong footing in terms of its earnings, even not only for 2024, into 2025 as well, the current year?
Yes, Boston, if you look at the investment environment, you realize that for United Capital that is into investment services, that has subsidiaries in trust and registry business. If you look at the investment income, which is very critical, you consider the fact that in terms of return, you would have strong return on investment assets in the country. You will see yield in the money market instrument, in the bond market instruments, above 20%, which gives them a strong opportunity for income optimization. But another thing we have to also recognize that being a non-bank financial institution, they also enjoy the benefit of not being compelled by the central bank to maintain cash reserve. Bear in mind that the banks are required to keep 50% of their deposits as cash reserve. United Capital does not need to do that, which means it has some level of competitive advantage in terms of ability to deploy its assets to earn income. And that's part of what we are seeing very strong earnings in terms of investment income, in terms of trading income.
Okay, so
and I think those are likely going to continue in the immediate.
How would you trade United Capital, and also in terms of price? Is it a hold, a buy, a sell, or?
Well, Bosin, without further reviews, I think given the kind of performance they recorded, and the prospects of the dividend opportunities, most investors in Nigeria are actually dividend income driven. They are kind of return driven. So most investors will want to take position in an equity instrument that gives them strong potentials to earn cash dividend.
Yes, so I'm sure there was a previous 2-for-1 bonus, as well as an interim dividend of 90 kobo per share. So I'm sure you didn't miss that.
No, nobody could have missed that.
So would you say this stock is a hold, a buy, or a sell?
Yeah, that's why I said earlier that any instrument like United Capital that gives strong earnings potential, strong benefit payment, script dividend and cash dividend, at that point, investment instrument that the people will bet on buying.
Okay, let's talk about Boa Cement. I just want to touch on from financial services into industrial goods. Boa Cement is the second most capitalized cement maker on the NGX. What do you make of its earnings for last year? How will you trade the stock?
Yeah, Boa Cement has been in demand, was quite in strong demand last year. And I think given the level of profitability they've also declared, then you are seeing a revenue growth of over 90%. Of course, we know that virtually all operators in the country have significant cost growth or increase in costs as a result of depreciation of local currency, as well as increase in inflation rates. So, but if you look at their profitability, you observe that profit after tax was largely flat because of the material increase in costs. But given the environment where we are, given the size of the market, because one of the things you have to look at, you look at the historical performance, you also look at the prospects of the future prospects. And I think given the passing of the 2025 budget, the votes that had been designed to go into infrastructure development, and if you look at even the GDP figure for the fourth quarter of last year and the full year, you see increase in construction. Increase in real estate. These things will dovetail into demand for cement. The road construction also likely going to lead to the increase in demand for cement. So I think we should see a stronger growth in their top line, which is their revenue in the current year. And I also believe that with some level of stability in the exchange rate, the increase in costs, operating costs that we saw last year, and also decline in inflation from about 34.8% to about 24.48% in January. All these things will lead to lower costs and therefore improvements in profitability. I think Boa Cement should see a higher level of profitability in 2025. And by the time we see the first quarter of this year, investors may consider it as a peak for their portfolio.
Okay, great. Before we go, let's sum it up with Seplat Energy Financials. What's your take? Give me a minute of your analysis on that, what we just received.
Well, Boston, Seplat, it's actually one of those operators that have a very strong competitive advantage in the economy. Bear in mind that they are into crude and gas exploration. And they have a strong gas dominant operation in the country, and gas had remained quite strong in terms of price, although we are seeing a decline in the price of crude. So, and they today stand to be one of the strongest operators in the oil and gas sector, particularly the upstream sector. They have a very strong cash base, but most importantly, they just got the federal government to approve the acquisition of Mobile, which will have the possibility or the potential of adding over 200,000 barrels of crude per day in their production. So you're going to see a Seplat that will be a completely transformed entity based on the acquisition of mobile assets. So for me, it's among our recommended stock for buy. I mean, one of the stock we're recommending for buy for any investor that has a medium to long-term investment horizon.
Well said. Thank you for those perspectives on some of the latest financials on the market here in Nigeria. Thank you very much. Have a pleasant evening, sir. Justin Chukwu, the Group CEO at Carrier Asset Management.